Hello and welcome back, guys. So in this particular session, what we will be discussing about is TYU number 3 or question number 3 from SPR's exam kit, okay, 2018. So what we will be talking about is this particular question. So what we are given is that we are given the background information where the following extracts from the draft financial statements relate to Bubble, a public limited company, and Teisler, a company in which it has investment. Okay, so what we are given is that we've been given non-current assets. PPE investment in Teisler is also given, and then financial asset is also given. Total current assets, equity, retained earning, other component of equity. So the following information is relevant to the preparation of consolidated statement of financial position as at 30th October, right? So 31st October is our year ending. Okay, so Teisler. So Teisler Bubble owns 60% of equity shares of Teisler, a company located overseas which has presented its financial statements in dinar. The shares in Teisler were acquired on 1st November 20x4. At the date of acquisition, the retained earnings were 258 million. Teisler had no other component of equity. On this date, non-depreciable land was carried in the financial statements at $50 million, but it had a fair value of 20, right? So it's a land, we don't need to worry about additional depreciation. So the non-controlling interest to be calculated at fair value by reference to. So it just means that it's a fair value and then quoted at share price. So share price is 2.62. The impairment of goodwill was undertaken as at 31st October. Impairment has been impaired by 20%. Teisler has not issued any equity shares since acquisition. Okay, having said that, what was the investment? And does it say anything? Does not say anything, so we need to figure it out from here. Okay, so that's the thing. So we are given the interest rate. Okay, that will be useful later on. And then overseas property. So what do we need to talk about? Overseas property. Bubble wished to expand its overseas operations and on May 1st, 20x5 acquired an, so it's middle of the year. Okay, so it's mid-year acquisition with a fair value of this in exchange for building. So acquired an overseas property with a fair value of 8.5 in exchange for building. Bubble paid the supplier with land which Bubble had held, but for which it had yet to determine its use. The carrying amount of the land was 5 million and it had a market value of $7 million. Alright, so remember, see, this is in dollars, this is in dinars. Okay, so there will be some translation needed as well, and then which had open market value of 5 million. Bubble was unsure how to deal with this transaction so has transferred 5 million from investment property to PPE. So basically what you do is that when you're transferring from investment property to PPE, you recognize the gain in SOPL, and then after that you do as per IAS 16, which says that any revaluation is taken to OCI, right? So the transaction has commercial substance. In addition, Bubble spent 0.5 million to help relocate staff to new property. This is always expense. Always remember that relocation is always expense. And added that amount to the cost of the building. You can't do that. So added cost. Bubble has made no other entries in financial statements in relation to property. Bubble has a policy of depreciating properties over 35 years. Follows the revaluation model under IAS 16, and then after that at the year end the fair value is 75 million dinar. Okay, So there might be some OCI item as well. So what we are required to calculate is that calculate with supporting explanations the value of goodwill arising on with supporting explanations. Okay, the value of goodwill arising on acquisition of Tesla, that should be reported in consolidated statements of financial position. Explain why the foreign exchange difference arise on retranslation of Tesla and how they can be accounted for in consolidated financial statements. As part of your answer, you should calculate the balance on the group translation reserve as at 30th 31st 20x5. So group translation, right, reserves. So there will be net assets and then goodwill translation reserves as well. Okay, so advise the director of Bubble how to account for how to correct the accounting treatment of overseas property, showing the adjustment needed. Calculate the PPE balance as it would appear in consolidated statements of financial position. And then functional currency. So Tesla operates a mine. Its income is denominated and settled in dinars. The output of the mine is routinely traded in dinars, and its price is determined initially by local demand and supply. Tesla pays 40% of its cost and expenses in dollars, with remainder being incurred locally and settled in dinars. Tesla management has considerable degree of authority and autonomy in carrying out the operations of Tesla and is not dependent upon group companies for finance. Okay. So discuss and apply the principles set out in IAS 21, the effects of changes in foreign exchange rate in order to determine functional currency. So let's calculate the goodwill first of all. So let's use the given information. So what's our holding percentage? 60 and 40, right? So first thing first, working note 1, working note 1, structure, bold, parent, come on man, parent NCI. So 60 and 40, but what we need to do is that it's a percentage, right? So 60 and 40, why bold? And then working note 2, calculation of net assets, right? Net assets, bold it. And then share capital. And then what else is there? Retained earning. There is other component of equity as well. I know that other component of equity. At acquisition, SQ, at reporting, post acquisition. So at acquisition, what was the share capital? So 210. 210, right? 210. So this is in dinar. 210, and then retained earning. It's the retained earning. So at acquisition 258, 292. 258, 292. 258, 292. Bold, other component of equity is not there, right? It's not there. So fair value adjustment is there for 20 million, right? So fair value adjustment. land. So 20. Anything else? URP, anything of that sort? I think it does not talk about that. So I think we are good. Hold it. Working note 3. Calculation of goodwill. Hold it. Calculate LA. Calculation of goodwill. Cost of investment. Fair value of NCI less net assets at acquisition. Total goodwill less impairment. There is some impairment as well. And then after that, goodwill at reporting, right? So we know this is minus this figure from above, and then after that our cost of investment is how much did we invest. So it's not over here, so it's over here. Okay, so 46 million, right? So 46 million into 8. Right, so 1st November, isn't that the acquired date? Yep. So 846 into 8. So it's 46 into 8. 368 million, right? Then fair value is, so what's the fair value? So fair value is fair value is 2.62 dinars per share. 2.62 into 210 into 40%, right? So what we will lose that 40% into 210 share capital, so 40% into 2.62. Isn't that how much we paid for it? I think that's what it is. 2.62, yeah. So I'll just round it up, okay? So 20 or what I'll do is, so let's add it up. This plus this, and this plus this. So 100 is our goodwill, right? What's the impairment rate? So this figure into how much has been impaired, I think it's 20%, okay, into 0.2. What happened, man? Into 0.2. Okay, so it's because of that figure. So we need to remove the formula and use the correct thing. You see, now it's good. So goodwill has been calculated, and then after that this is all in dinar, right? So what we need to do is that goodwill is this figure divide by how much is the rate at 31st October. 9.5. 9.5. 9.5, right? 9.5, yep. So goodwill is, this is in dollars, okay? So let's explain this thing in our answer. So we need to explain it as well. A1, right? So A, and then after that goodwill. As per IFRS 3 business combination, goodwill is the difference between cost and fair value of investment and net assets at acquisition. Investment, right? So is calculated in dinars. And is translated using closing rate at 31st October 20x5, right? Goodwill is 8.4. That's 8.4 divided by something 9.5, right? So how much value did we get? No, it's 80 divided by 9.5. So 80 divided by 9.5. 4 million. And then after that, so let's copy and paste this whole thing. So this thing as well. Right, and then after that, while calculating net assets subsidiary, the additional, the fair value of land is remeasured to dinar 70 million. Dinar 70 million. Alright, so that's out of the way. Let's solve the second. Okay, so what is second? What's our second question about? So it's about why foreign exchange difference arise on retranslation of TSLR and how they should be accounted for. Okay, so that will form. So we will go step by step, okay? Working note 4. Calculation of NCI. So it's this figure. And then share of post acquisition profit. This impairment of goodwill, and there will also be something else, okay? There will be, so this figure into 40%, right? So that's their loss, and then for impairment as well, it's 20 into 40, and then there will also be something else. So translation, I don't know if it will be loss or not, but it will be translation of goodwill. It could be add as well. Translation of assets. Okay, so working note 5 will be group reserves calculation Isn't that what question was asking us? Group reserves, or it was saying something about translation reserve? Okay. So we could do that as well, or we could just directly calculation of translation reserve. So in order to do this, we need to do another working again. So let's make it working number 6. Working note 6. So particulars translation of goodwill. Okay, so particulars, and then after that dinar exchange rate, and then dollar. So opening, or it will be goodwill at acquisition. Okay, so this is this same figure, so this is in dinars, right? I've already made a mistake over here. So is this everything in dinar? Okay, yeah, I can just translate it at the end. I could do that, or I could do it something other way. Let's not worry about that right now. Will at acquisition, what was the translation rate? At acquisition on 1st November, it was 8. 8, right? And then less impairment. Then closing or goodwill at reporting. So this is equals to this figure, right? And then this figure is sum of everything. And then impairment is average rate. Okay, so impairment is average rate 8.5, 8.5, 8.5, and then what's the thingy? 31st October 9.5. So 9.5 is the closing rate, right? So what I need to do is that this divide by this. Copy, paste, paste, right? So this plus this minus this. So what has happened over here? So I'll just make it 20. Should be in minus anyway, it doesn't really matter. 20, right? So I add up everything, I should get that. This plus this. No, why there is a difference? Plus this is that, and then this minus this. Hmm. So this is also minus, right? So this plus this minus this will give us 8.42. Okay, this is translation loss. Translation loss. Okay, so impairment attributable to parent NGI, and same thing, but anything being difference is exchange loss. Okay, so this figure will be this into holding percentage. Not that for 0.4. Okay, so in case of parent as well, it's the same thing. So is equals to this figure into 0.6. So this figure into 0.4. So checking one more time, this figure plus this figure. Okay, makes sense. This figure plus this. Okay, so that's all done. So what will happen is that, so trans exchange loss on goodwill will be, this is in case of parent, right? And then after that, working note 5. 5, no, not 5, 7. So translation of net assets. same thing. Just a bit of difference. Opening net assets, profit for the year, and then closing net assets. Okay, so what's our opening net assets? Our opening net assets is this figure. Exchange rate being same 0.5, I think that's the average rate, right? This is the closing rate, 522. So what's the profit? What's the profit? Has it been given? I don't think so. The profit has not been given, I think. Or yeah, is it? It's there. It's just the difference between that and that. So it's this figure is this figure, post-acquisition profit. So what we can do is this divide by this, this, this plus this minus this, right? Should be in minus. What we can do is that this minus this minus this, right? Change loss, right? What I'll do is that just to make it look nice, same thing over here as well. Same thing over here as well. Only one. Okay. So exchange loss attributable to parent SCI. So this will be this figure into 0.6. The rest will be this figure into 0.4. So what will be over here is that we will bring the parents exchange loss on net assets. So total will be this plus this. Right. So what do we need to do in the question? What does it say? First thing first, write heading translation reserve all right, let's bold it. explain why foreign exchange differences arise and how they are accounted for. Okay, why do they arise? Foreign exchange differences arises when translating when translating Islers into presentational currency. Of the group because number one being goodwill is always translated at closing rate. Opening assets are retranslated every year at closing rate. Profit impairment at average for the year is translated in SOFP at average rate, but net assets at SOFP is translated at closing rate. Translated at closing rate. Exchange differences arising on the retranslation of overseas subsidiary is recorded in other comprehensive income or OCI. Is recorded in OCI, right? As an item that can be reclassified, right? Exchange difference arising on opening net assets and profit are attributable to parent and NCI. NCI, right? Differences. The same applies in case of goodwill if fair value method is used. Right? Anything else that we missed? Let's give them the translation, this thing as well. Calculation of, give them that, and then that should be the answer. Third question will be about, what is it about? Overseas investment. So advise the directors of Bubble on how to correct the accounting treatment of overseas property. So overseas property. So what has happened with this overseas property is that it has been valued at, so wish to expand its overseas operations on May 20x5 acquired an overseas property with a fair value of 8.5 million dinars in exchange for building, right? The Bubble paid the supplier with land which Bubble had hailed for, but it had yet to determine its use. So does it say anything about land in this? So it does not say anything about land, okay. And then after that, the carrying amount of the land was 5 million and had a market value of 7 million. The Bubble was unsure as to acquired and okay, so that was a building that it was acquiring. Was unsure how to deal with this transaction, so has transferred 5 million from investment property to PPE. The transaction has commercial substance. In addition, Bubble spent 0.5 million to help relocate. Okay, so that's not the thing that we are looking at. So since it has already done that, 5 million, so what we will do is that debit PPE much was it? By 2 million. Credit PL by $2 million, right? 2 million. Since it was land was classified as IAS 40 investment, so any gain or losses is charged to SOPL. So $2 million, which is $7 million minus $5 million, should be credited in SOPL, right? Then after that, what has happened is that on May 1st, right? So in addition, Powell spent 0.5 million to help relocate and added the amount to the cost of the building. So capitalization, the staff relocation expense cannot be capitalized as it does not enhance or improve the capacity of the building. So a correcting entry as follows as following is required. So they have actually added to the building, right? So that must be debited. So debit PL by how much? $0.5 million, and then credit building or PP. $0.5 million. So what has happened? As per IAS 16 PPE, initially the asset is recognized at cost and subsequently cost or fair value model can be used based upon entities business model. Right? So after that, what has happened is, uh, what's the cost of the building? So now the building is priced at 58.5 million, right? No, first of all, what we need to do is that we need to translate it as well. So 58.5 million dinar. So 58.5. 8.5 divided by what was the rate on that day, on 1st May, right? 9. 1st May 9. Divide by 9, 6.5. Buildings cost is $6.5 million. This is 58.5 divided by 9. 58.5 divided by 9. Yep. 58.5 divided by 9. What I can do is that working note. So let's do something. Let's depreciate it. Debit depreciation, which will be 0.5 divided by 30 into, so 1st of May, right? So May, June, July, August, September, October, 6 months into 6 divided by 12, right? For the first year. So that's our only depreciation, I guess. So is equals to this divided by 30 or 35. I think it's 35. 35. 35 into how much? 6 by 12. So 0.09. So we could say 0.1. 0.1 million, right? So credit PPE. Does it say explain anything? Advise the directors on how to correct. Okay, so the adjustment needed. Credit $0.1 million. Cost is 58.5 divided by 9. This is dinar. 8.5 divided by 9 is equals to 6.5 billion. Then after that, what has happened? PPE, right? What was bubbles? 280. Million dollar. 390. 390 divide by 9.5. It should be 9.5 because we are translating using closing rate, right? So is equals to 390 divided by 9.5. 41.05. 41.1. This is for Chrysler. And then after that, the adjustment, right? Adjustment increased it by 2 million. And then after that, the adjustment was done. And then after that, depreciation, right? Depreciation is equals to how much? $0.1 million. This would be in minus. Or what we can do is minus. And then expense is also there, right? 0.5. Incorrect cost. 5 million. And then after that, there is something else that we need to read properly over here. What has happened now is that the property, it is estimated that the property is 75 million dinar. Okay, so it has increased to 75 million dinar. Right, that's what it is. The property has the property's fair value has surged and is currently 75 million, right? is currently 75 million. Nope, is something else. So this 75 is dinar, right? Dinar 75 divided by 9.5. So how much will that give us? So 75 divided by 5, 7.89 or 7.9 million. Carrying amount on this date, which is 31st October, right? October 20x7 or x3, what is it? 20x5. 20x5 is, so what is its carrying amount? Okay, so what was our building's cost? So building cost was 6.5 million, right? And then anything else that has happened is dollar 6.4 million. Are we missing anything? So what is the cost of the building? So building cost is the building that we acquired or let's see. Okay, so it's been credited by 7 million. Okay, so 7 million was only paid, right? So we gave them 7 million. That means our cost was 7 million. Is not 6.5 but 7 million. Okay, so the building's cost is 7 million, and then after that depreciation is also charged on that, but it's the same thing. So this figure will be 7 minus 7 million minus $0.1 million, 6.9 million, right? 9 million. The gain of how much is it? 1 million is recorded in other comprehensive as per IAS 16. The entry will be debit because its value had to increase and then credit CI, right? Then so again over here revaluation will increase its value 1 million, so 280 plus 280 plus 41.1, 280 plus 41.1 plus 3 minus 0.6, so 323.5, right? It should be more. I forgot something. There should be something. This one, fair value adjustment, 20 million as well, right? And then fair value adjustment, this should be dinar 20 divided by 9.5, so this will give us 20 divided by 9.5, 20 divided by 9.5, 2.10, right? Plus this, now it's correct. So 2.1 million, right? So total will be our total should be $325.6. 325.6, yep. And that's pretty much it. The next question. So foreign currency, right? So Daimler operates a mine. Its income is denominated and settled in dinars. The output of the mine is routinely traded in dinars and the price is determined. So first of all, what I'll do is that explain everything. From so currency, there is the currency primary economic environment in which the entity operates. Right? Primary is to determine functional currency are first thing first, currency that influences the sales price. Okay, sales price. Second thing is the currency whose competitive forces and regulations currency of the country, competitive forces and regulation affect the sales price, and then currency in which input cost such as material, labor are paid in. Right. So these are the conditions, and then these are the condition. So have we satisfied that condition or not? Let's determine that first of all. So in case of Tislar, so Tislar operates a mine. Its income is denominated and settled in dinars. Okay, so it's affected by dinars. The output of the mine is routinely traded in dinars, and price is determined initially by local demand and supply. 40% of its cost and expenses in dinars, with the remainder being locally unsettled in dinars. So 60% is thing, right? Okay, so that's easy. In this case, the currency that mainly influences the sales price will normally be the currency in which goods and services are settled. In case of Chrysler, the sales price is affected by local demand and supply, which is in dinar, which is settled in dinar. Dinar, right? Dinar. And then after that, however, in case of case, however, the cost, the input costs, which consists of dollar, so however input cost, which consists of dollar, makes it complicated and it is inconclusive. IAS 21 also talks about secondary prescribes secondary factors to be taken into account, which are the currency in which funds are funds from financing activities. Activities are generated. The currency in which fund and in the currency in which revenue from operating activities are retained. Okay, so other factors also include autonomy of the entity, financial, that is financially or in decision making. The money available for remittance to parent right, and then after that whether it is an extension of parents business. Okay, so these are the factors that we need to consider. So in case of Tesla, what has happened is that so pays this much has incurred locally. Tesla management has considerable degree of autonomy, okay, not dependent upon group for finance. So Tesla has significant autonomy and is independent of financing it has me in decision making as well. Therefore, let's conclude Tesla's functional currency is dinar because of above mentioned reasons. Right, so I think we've covered everything of this particular question as well. 6 marks should be good. I think we've covered it. So that's it pretty much, guys. So this is how we actually solve this problem. So since this problem is also finished, so we'll look at question number 4, and then our foreign currency is also done, so that will give us more clarity. So until next time, bye bye.